Luke, thanks very much for joining us from Prague. Just give us a little bit of an insight in terms of your views on the capital flows, both I suppose coming into Europe, but also particularly for CE markets.
Well, it's very timely. We've just completed a global survey which focuses on the markets across the world, but also an EMEA element to it. Globally, it's very clear that we're expecting this year to be much more active than 2020 for obvious reasons of the markets coming back and the vaccine story and things feeling more stable. But I also think that a lot of the money that was to be deployed in 2020 has really carried forward into 2021. And we're seeing real estate really becoming a very important element for your larger global investors that are playing in different asset classes outside of real estate as well. And it's becoming more and more viewed as a safe haven, given the low interest rate and bond yields currently and the valuations you're seeing in the stock market. Real estate is now drawing in more of the capital than it previously would have. And then I also think that there's been some major shifts in where that capital is focused. So if you look historically, it was always your traditional office investments were the number one category. And then it was, if you go way back, it would have been retail or logistics battling it out for second. And then a lot smaller, I don't even want to say alternatives, but you had hotels and some alternative sectors kind of in fourth, fifth, sixth spot. Well, what's really changed, I think, partially as a result of the pandemic, but also in general, is that you're seeing the residential sector becoming a much, much bigger kind of prime focus for investors. So if you look within EMEA, 17% of investors now are saying that the residential sector, so build to rent, student housing, et cetera, is their primary focus. And that's only marginally behind logistics and offices, really for the number three destination for capital. As well, you're seeing data centers taking up a very large, say up to 11% of the primary focus for investors. And hotels and retail obviously has gone down significantly. So the makeup of where the capital is going to go is very different. And we're also seeing a major shift towards really the security of income, whether it's from a geographic perspective or lease lengths. And investors are really looking at it from the perspective of preserving capital. Obviously, returns have to be there, but they want to be in tier one cities. So we expect markets like London to have significant increases in investment activity. And then even within Central Europe, there will be much more focus on the capital cities in each market. We expect Warsaw to continue to lead. We think Czech will be as active as really the supply allows it to be. And then Budapest always will have significant activity. As you step into the secondary markets, whether it's frankly Slovakia or Bulgaria, or whether it's secondary cities in some of these countries, we do expect there to be a pullback in terms of investment activity, at least for the next 12 months until investors get a feeling for where the market's going to stabilize.
And in terms of capital flows, Luke, are you expecting to see, obviously there was a lot of Asian capital coming into the market. What are you seeing? Are there indications coming from the end of 2020 and into 2021, especially also for domestic capital?
From a more global perspective, heading into CE, Asian money is going to continue to be a story, and the story is going to be different than previous years. It will be more diversified. We're seeing Japanese investors having done deals in Central Europe, so the likes of Kojima, but we're also seeing Japanese pension funds, typically now through third-party advisors, but taking a very serious interest, particularly in logistics, but in other asset classes as well. We've seen Singaporean money, Malaysian money, and also I'd say there's been a return of Chinese money. And we expect there's going to be a few significant transactions with Chinese capital back into Central Europe and Western Europe as well. When you look at the domestic capital within Central and Eastern Europe, the COVID crisis really highlighted the importance of domestic capital, and I think it's accelerated their development by about 4 or 5 years. So previously, domestic capital had been active, looking at around 30% of investment volumes, but they've had the major advantage over the last year of really having captive markets with a lack of travel. So these domestic players have not only increased their inflows, so they're receiving more money from their investor base, but they're now able to move up the ladder, and they're looking at prime properties, which they never did. They're looking at 100 million euro plus tickets, which traditionally were never the realm of the domestic investors. And we expect this to continue. We think it's a very positive development because I think it just shows more strength in the market. And I think having these domestic investors now feeling comfortable competing with the likes of German money, of private equity money coming in from the US, et cetera, just gives the entire market more confidence that the depth is there, even in light of a crisis that will carry through and really not have the lights go out, say, like we did during the global financial crisis.
Very interesting to see some of these changes in terms of the capital flows, Luke. Thanks very much for joining us.
Thank you.